Okay, everyone, welcome back to the Price Action Labs YouTube channel. We're going to be going over my top indicators and tools I use as an order flow and ICT trader. So if we start with the ICT side of things, right, there's only two indicators you ever need as an ICT trader, right? So the first of those is going to be the PO3 indicator, and you're using different time frames, the 4-hour, the daily, and the weekly. And we're going to go over all three in this video. The second thing you need, which is not as important, but you need the Asian range indicator. So you need to see where the Asian range is. So what you see over here with the orange, these are all the Asian range indicators. All right, this just shows you where the Asian range is. So I'm going to dedicate this video to a particular case study, the best trade you could have taken last week, and it was actually on Thursday, the 27th of February. So we're going to break this down in terms of the power of three first. So what we had, let's go to the higher time frame and see what we had. So on the higher time frame, it's important to understand your basic market structure from a higher time frame perspective. Then we go down to a lower time frame perspective. So we had a structural low here, and we had a structural high over here. So this, in fact, is our dealing range. So we have a dealing range low, and we have a dealing range high. So notice how we have our 50% hit level here, and we're looking for fair value gaps that are below the 50%. This was going to be our target, right? So just a quick one on this. How do I find my POIs? How do I find my points of interest? How do I find areas that I want to be targeting on the lower time frame? So we had this big fair value gap over here, but we had the POI. So this is how I mark out my POI. It is essentially the last candle before the big push, which leaves an imbalance. To make this very clear, this is the fair value gap over here. So the fair value gap is in blue, and this is going to be our POI. So what we were looking for, my bias going into this week was bearish. And the reason it was bearish is because I was actually looking for price to do this. I wanted to see price come down into this area before filling it and then moving to the upside. So remember, when we're looking on the higher time frame, there's two things we look at. We first look at where we are in terms of premium and discount. Here we were pretty much at the 50% level, so we were at the equilibrium, but we've come from a premium into a discount. And the second thing we target is basically fair value gaps. So we look for fair value gaps in the discount and we target them from the premium. This is a basic higher time frame kind of narrative that I use. This is my basic logic from the higher time frames. Now from here, when we go down to the 15-minute time frame, right? So the 15-minute time frame, of course, we had our overall target over here. But what was interesting about this trade is that even though our narrative on the higher time frame was bearish, our higher time frame bias was bearish, this was actually a really good sell trade. And I'm going to break this down, why this sell trade was so effective, right? So it all comes from understanding where we are in terms of price, right? So notice how we have our Asian range over here, right? So this price action here on Thursday, sorry for the pause, was giving us this Asian range over here. But to give you some context, we had a fair value that was left over from Wednesday. So I'm always looking for previous day fair value gap. So this Wednesday fair value gap was resting over here, right? So this zone over here, this here was my main POI. So I was keeping an eye on this zone. The reason this zone is valid, again, is because it's left a 15-minute fair value gap. So we have a 15-minute fair value gap over here. And so we're waiting for price to react off this zone, right? So what makes a point of interest, or in this case, a demand zone, or even a supply zone, if we were to flip it on its head, what makes this valid in terms of the buyers and the sellers? Well, there's a few things. We're going to be going over this in terms of the order flow. So the order flow is what we use to determine our entries, right? So let's just go over this in some context. If I take up the power of three indicator, let's start with the weekly power of three, right? So what you see here, this big red candle is the weekly power of three, right? So what we can see is the weekly candle opened here, right? This is the weekly opening price all the way up here, right? This is the weekly opening price. So what you need to understand when you look at this, you need to understand that we are significantly below the weekly opening price, right? We are significantly below the weekly opening price. So what this means is you want to be looking for buys below the weekly opening. This is a big confluence you can use. That first thing you want to understand. The second thing to understand settings from the weekly power of three to the daily power of three. I want traders to understand how you can use this same indicator but with multiple time frames. So now we go to daily power of three. So this is the daily power of three. We can see now from the daily power of three, what makes this trade high probability is the three following things, right? We understand we're below the weekly opening price. We're also below the daily opening price because the daily opening price is over here. That's step number one. Step two, we've tagged it to a 15-minute fair value gap. And step three is that we're not only below the Asian range, which is good, we've also taken out the previous day low as well, right? Price took out Wednesday's low and tapped into this range over here. So what you need to understand is once we've taken out a previous day low. Once we've taken out a previous day low and we've tapped into a higher time frame or a 15-minute fair value gap, and we're below the daily opening price, this is a golden opportunity to take longs, even though we account the trend from the higher time frames. This is important to understand. So once we have that in place, we can now look to see how the order flow was reacting at this particular area. Okay, so let's now head down to the 5-minute time frame. So on the 5-minute time frame, I like to see how price has reacted from this area. It is on the lower time frames do I now use the 4-hour power of 3. So the 4-hour power of 3 is even more interesting, right? Let's head down to the 1-minute time frame. So on the 1-minute time frame, we can analyze how price has behaved in this particular region, right? So we see price tapping into this area and we're below the 10 a.m. Eastern. So what you see here is a 10 a.m. Eastern and price has reacted off this fair value gap below the 10 a.m. Eastern. So now when we go over to the footprint charts, the footprint charts give us an indication between the buyers and the sellers. So we have the same exact price action over here, same fair value gap. Let's now head down to the 5-minute time frame and understand what was going on between the buyers and the sellers. All right, so here we see the 5-minute time frame, right? And you just want to look at this candle. You want to look at one thing, right? We can see very, very obviously what was going on over here. To give people some context, right? This candle you see over here is exactly the same as these 1-minute candles over here. This is the 1-minute time frame coming up like this. And now when we look at the order flow is basically confirming this on the 5-minute candle. So what's important to understand is we see this very, very clear rejection, right? We see a rejection, but what's even more interesting is on the 5-minute time frame, what we can see, I want traders to understand what we can see is we see this, right? We see 4K for 843. This means that there's so many more aggressive sellers than there are buyers. So think about this. If the market wants to move down, we're going to see aggressive sellers. But we've come straight into a key level. We've come straight into a fair value gap. These are so many sellers over here, resting aggressive sellers. This is at the price point 59.40. So you know at 59.40, there's a ton of market participants hitting the bid. But these bidders, right, these aggressive sellers have not been rewarded. If they were rewarded, we would have broken through this level, right? We also have another green candle over here. What's so interesting is that we have a rejection of this green candle, but the bottom half corresponded to aggressive sellers. In fact, if we look at this, we have 2K for 595. So this means that there's approximately 4 times as many aggressive sellers than there are buyers. So by reading the delta and by reading basic volume and bid and ask, we can take this from 15-minute fair value gaps and apply it to a regular candle. Exactly what I do in all of my trades, and that's exactly what this case study is planning to show. So if we go back here to the candlestick chart basically shows us the candles, the representation, but it doesn't show us the order flow. So we can take this trade over here below the 10 a.m. Eastern, and we can have a stop loss just below the low over here. So what we're doing essentially is we're seeing a lot of aggressive sellers over here. Therefore, we are anticipating the sellout, the exhaustion of these sellers, which is what creates the low of the candle in the first place. Right, so now from here, where do we target? Right, now that order flow has confirmed this level, well, we're simply looking to target, we're looking to target the first kind of 1-minute fair value gap, because the S&P 500 reacts pretty aggressively to these fair value gaps. So if we continue to play price on, what we can see is price eventually does give us a nice 1 to 2 or even nice 1 to 3 RR. But I'm just going to go over something because I want traders to understand exactly what is going on between the buyers and the sellers. This zone is very, very important. And the reason for that, the reason why this zone is so important is because we're actually reading the order flow. And I want traders to understand, what does this mean when we're inside a 15-minute fair value gap? Because if I break this down, I want traders to understand this, right? We are going to understand exactly what this means, right? So we are going to look at this and we are going to understand exactly what this means, right? So when you see 4K, right, you're seeing 4K 843. This corresponds to this price action. We are seeing so many more aggressive sellers, right? But these aggressive sellers were unable to break this level. This is the level the sellers couldn't break, right? What's even more interesting is that we have a second rejection. So this is the rejection you see over here, just below the 10 a.m. Eastern. So what we're seeing over here is we're seeing 2K for 595. So we see so many more aggressive sellers than buyers, despite that the market was able to reject off this level and then move to the upside. And this is exactly what we look for over here in all of our trades, right? So whenever you're trading and you're unstuck on what indicator to use or what fair value gaps to use, always remember your trading will probably be blinded unless you're reading the interaction between buyers and sellers, right? So that's a quick trade recap I wanted to give people. If you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.